Hello and welcome back to another video. Today I'm going to talk about GMX, a protocol that I've been using on Arbitrum. It's also available on Avalanche as well. What is GMX? So GMX is a protocol that allows traders to trade between a couple of assets, I think, and it allows them to use leverage so they can borrow money to increase their gains and also their losses. Because it's such a concentrated pool of a few assets, liquidity is very good. So swaps, there's not much a impermanent loss when you swap. You get a good rate. So that attracts traders because they don't want to get slippage when they trade. And then the GMX token is their governance token and takes 30% of these fees, while the GLP token, the one that the traders are using the assets of to trade, that earns 70% of fees. So as a participant in GMX myself, not in terms of trading but to receive yield, I hold the GLP token, which consists of dollars, Ethereum, Bitcoin, Link, and Uni. So 45% is in dollars. So that's it adds to the stability of the pool. And then you've got a lot of blue chip DeFi tokens with Bitcoin and Ethereum leading the way heavily. And then you've got 1% in Link and 1% in Uni. So they're small allocations. And this is it. So let's have a look on the next slide and see what it says. So GMX, the governance token, is now bigger than Curve. It was a few days ago anyway when I took this picture. So you can see that in this short time, GMX has been able to accrue a lot of value, and the market cap has increased here. As you can see, it's basically almost 420 million is the market cap of GMX at the moment. You can see here, it's had good growth over the last, I think that's week or so, or maybe even month. Yeah, week and month have been looking good. As you can see here, I go to crypto fees, great website, and I filtered out the layer 1 and layer 2 transactions, and then I think I unbundled them as well, so you can see each individual protocol. And you can see here that GMX, on a 7-day average, the fees are pretty high. They're up there with Aave on Ethereum. So 200,000 in an average 7-day fees. Pretty good. And this is majority of it's paid in Ethereum. So the token itself is not getting diluted as such. I guess it is at the moment currently, but it generates a lot of your rewards in Ethereum, which is probably one of the best things to get paid in, maybe after dollars. So I want to go through the token and the mechanics. So when you come to go to here, into this page, this is the GMX website. Let me close this. So as you can see the stats, so the GLP pool, which is the token that consists of these assets all here, and the target weight and the current weight here, the target weight, so that has almost $300 million in assets under management here. So that's how big the pool is. This pool here, 300 million. And then it shows you the volume. It's 180 million in the last 24 hours. And it shows you the long and short positions. And it shows you the fees. This would have been 11 days of fees, is 1.5 million. No, sorry, 4 days of fees is 1.5 million. Shows you the total fees. Okay, cool. The GMX token here shows you the supply, the total that's staked, and the market cap. So you can see not much of it is circulating. A lot of it is staked because of the yield that it incurs. It shows you the stats here. So actually at the moment, 52% of GLP is just in stable coins. I believe the target is 45%. So people have taken the assets out, and it's more heavily weighted in dollars at the moment. Of course, that's the website. That's kind of the main page that you would look at when you come here. The next one you can do is go to earn, because we use this to earn, don't we? And you can buy the GMX token, or you can buy the GLP token. And as I represented in my slide up here, when I buy the GLP token, what I'm actually purchasing is the underlying assets that the traders use. So 45% of it will be in dollars, 33 in ETH, 20 in Bitcoin, and 1% in Link and Uni. So that is it's like an index, a crypto index, and then you're just letting people trade between that index to earn fees. So once I buy them, it will automatically stake the tokens, either GMX and GLP will automatically stake them, so you don't need to worry about that. And that will just automatically, you'll get rewards from that. So let's have a look at the tokens, because when I read through the documentation they provide, it was quite a little bit complicated, or maybe not worded in the best way. And this is just for me a way to visualize it and just gain more understanding. So you have the token, the GMX token, and you stake it, and that gives you 30% of fees from the whole protocol go to the GMX token, and that's roughly 6% paid in ETH. Bang, right there, you receive that as a reward. And then with the ETH, you can do what you want with it, hold, sell, or swap it once you claim it. You also get a percentage of the reward in GMX, escrowed GMX. So this token can't be sold. So once you claim it and you receive it in your wallet, you have two options. You could either vest it, which would basically put it in a vault, and over a year it would slowly unlock. So let's say maybe the best way to think about it is if you had 365 GMX and you put it in this vault to vest it, you would get 1 GMX unlocked a day, which would then you'd be able to sell it, or you could hold it, or you could stake it as GMX if you wanted to. Not sure if that would be the best thing to do, but that's an option. It gives you optionality of being able to unstake it once it becomes GMX. But as vested or GMX, you lose the optionality of the token. It becomes like illiquid in a sense. Your other option is to just stake your GMX, and it will earn the same rewards as what GMX would have earned. So you're going to earn fees on your fees, and it kind of locks you in and makes it a bit of a Ponzi, but maybe it's a clever Ponzi that works, because it's still, a lot of this is just accruing ETH, which is a token I would want to hold and acquire over the coming years. So there are your two options with escrow GMX. You are going to get multiplier points the longer you stake your GMX with, and that's good to incentivize long-term holders. So over a year you would have 100% increase in the amount of rewards you receive. So the earlier you can kind of get in and start staking your GMX, the quicker your multiplier points are going to go up, and that will make you earn more yield, more ETH, and more GMX from that. Your other option is to hold GLP, which is that basket of assets. So inside this GLP is dollars, Bitcoin, Ethereum, Link, and Uni. And the 70% of the fees that are generated by traders coming into trade between the assets in GLP, that gets paid out in ETH. And that works out as about 20% APR. So that's like a great way to earn yield. 28% paid in ETH. You're holding a token that actually has real value. Half of this GLP token is in stables. A third of it is in ETH, and basically 20% is in Bitcoin. So that's a good solid hold for multiple years. I think I have covered everything. The total supply of GMX is going to be 13,250,000. That's the estimated max supply. I think there's already been like 8 million in circulation or so. So yes, you're gonna get some. You're gonna maybe water down the yield of the GMX token, but as long as you're getting in early and able to hold and acquire as much as possible, you should be good. I think that is it. I mean, the only thing I haven't shown is like more of the website. If I'll go to earn and I want to buy GLP, because this is an interesting asset. The thing it reminds me of is the try crypto in Curve, where you have dollars, Ethereum, and ETH in equal proportions, like 33% each, which I guess offers more volatility because it is a higher percentage in crypto like Bitcoin and Ethereum. However, it's a good way to save, and that's another option. You'd buy GLP here, and the fees when you buy are dependent on the target weight and the actual weight at the moment. So if it's overweight, if it's overweight Ethereum, the fees are going to be higher to buy Ethereum. If it's underweight of Bitcoin, when you buy this with Bitcoin, the fees will be lower because you're putting your Bitcoin into the bigger pool of all these assets here. And you can see, so it's like a tokenized version of all these assets. So the price of this is 94 cents at the moment. And you're going to earn, 29.77% all in Ethereum. And my little plan, just thinking about this, is that like when the market dumps, you want to put dollars in, but you could also take out Bitcoin, because you'd have the most Bitcoin for the dollars then if you've already got like money in here. Or you could take out like Ethereum. It might even be more rewarding. When Bitcoin and Ethereum, when you feel like the peak of the market cycle is here, you would take out dollars, or you would put in Bitcoin, because when you put in Bitcoin, it's like selling half of it straight away. Like, let's say it got to $100,000 for a Bitcoin, and then you put your Bitcoin in, you had 45% of that would get sold for dollars, and then you'd expect the Bitcoin and the Ethereum and everything else to reduce in value. However, that $50,000 worth of Bitcoin you put in is going to remain at that value. So in the long term, the overall value of what you have in there is going to increase. I probably should do a chart for that, but I haven't got around to it today. But that's one way to think about it. And it is important to think about these things and do your own research. Look at prices, expected prices, and yeah, how that would work for you. It's not just something you put all your money in and hope it goes up or something. This is for me like a DeFi savings, like working savings account. Yeah, that is it. I'm going to leave the video there. Bear market blues. Things look up, things look down. Stay safe. Don't get trapped into spending all your money. Have a great time in the crypto world, and I look forward to seeing you next time.